Welcome to Level 1, Lesson 6. My name is RIA the Trader from TradingWing.net. In the last lesson, we talked a little about the difference between technical analysis and fundamental analysis. In this lesson, I will be focusing on candlesticks, which are an integral part of technical analysis. So let's get started. What are candlesticks? Candlesticks, better known as candles, are a type of price chart used in technical analysis. Each candle displays the high, low, open, and closing prices of a stock security during a specific period, a period that you get to choose. Before I continue, I would like for you to pause the video and try and find the highs, lows, opens, and closing points of the candles below. Once you have completed that task, please resume the video and we will go over the answers. So let's start with the first green candle. If you stated that the highest point was the high, you are correct. The highest point is known as the wick so long as there is a wick pointing out. The great part about having the name candlesticks or candles is that they are truly shaped like candles. In a physical candle, you have the body and you have the wick in which you light the candle. If you stated that the low was this point here, then you are correct as well, as that is also a wick. This is where things get a little bit tricky. On a green candle, if you stated that the open was at the bottom, you are correct. A lot of people may mistake the open being at the top. However, when it comes to green candles, the critical part to understand is that the open is always lower than the close. That is what makes the candle green or white depending on your charting platform. Now let's look at the final red candle. The high and the low of the red candles are the same. However, the difference occurs when you look at the open and the close. The open on a red candle is at the top, whereas the close is at the bottom. This demonstrates that the price opened higher than it closed during that specific period that you chose. Now let's talk about the specific periods. These specific periods are known as time frames, and time frames are the amount of time representing one candlestick. For example, in a 1-minute time frame, known as 1M on your charting platform, will display candles that are each exactly 60 seconds in length. 1-hour time frames, displayed as 1H, will display candles that are each exactly 60 minutes in length. The daily time frame, known as D, will display candles that are each exactly 6.5 hours or 390 minutes in length. Now you may be asking, why 6.5 hours? It is important to note that this daily time frame only takes into account the market open to the stock market close. Well, what are the market hours? On a regular day, the market opens at 9:30 a.m. Eastern Standard Time and closes at 4 p.m. Eastern Standard Time, therefore 6.5 hours. In the images below, you will see 3 different time frames. Each time frame represents the exact same length, however, they are displayed differently as they are different time frames. In the first image, you will see a 1-minute time frame, from market open to market close. In the second image, you will see the 1-hour time frame, from market open to market close. And finally, in the last image, you will see the daily time frame, from market open to market close. And that concludes this lesson.